please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Taking Stock, the show where we take stock of the week gone by. I'm Surabhi Upadhyay and with me is Anuj Singhal. Well, Anuj, what to say? Yet another turbulent, tough week for the Bulls. The grind continued. And if, I think the Bears were looking for headlines, they got them because the final close, ending just below that 10,000 mark.
Yeah, let's look at the big picture. Last year, if you bought at any point, you're making money. This year, if you sold at any point, you're making money. That's the end of story. Simple. The Bears are in control of this market. It might be a bull market correction, but it's savage and it's slow grind. That's a problem for the Bulls. One fell swoop, it's okay. Slow grind is always a problem. The mid caps this week saw second round of distribution. That is where the problem is because it looked like at least mid caps were stabilizing, but far from it. This week the mid caps underperformed quite a bit. And there's one more thing which is happening. This shift of money from banks to IT is well and truly on. On Friday, IT index was up 0.5%. Problem is the banks still have more weight on the index, so that's why index still suffers while banks go down. So for me, so to be 9,700 is crucial. You must hold that for the Bulls. Otherwise, the weak Bulls will throw in the towel. As of now, this is a bull market correction. I have absolutely no, issues with that. But in the near term, Bears have all the momentum. Next week is expiry. Who knows? If today's the Friday low goes, who knows what happens? I know,
and it's a big 4-day weekend then when we are talking about next week. Well, we've got lots and lots of opinion lined up for you. Big market voices coming up like Jonathan Sheasel of Ashburton, Chetan Iyer of Morgan Stanley, Neelkant Mishra of Credit Suisse. All of them would be talking about, of course, what triggered the Friday sell-off as well as where India is placed overall. So plenty of opinion coming your way. Let's, in fact, introduce our first set of guests on the show. We have with us Harsha Upadhyay of Kotak Mutual Fund, as well as on the technicals, as always, Ashwani Gujral here to give us some guidance. Gentlemen, thanks very much for joining us on Taking Stock. Harsha, I will come to you first. From the levels of 11,000 plus to now below 10,000, it's been a big fall. How do you view things? Are these the right times for someone like you to go and deploy all the cash that you might have? Or do you think you are still waiting for better levels?
Good evening, Surabhi. Markets were already on a downtrend, and the recent spate of negative news flow, both from local as well as global markets, has not helped much. Clearly, I think the nervousness has increased in the market. But as far as our investment style is concerned, we don't worry much in terms of what is the current market dynamics and how that should change. I mean, we are long-term investors. And we continue to look for opportunities. And any spate of volatility is obviously good for long-term investments. So to that extent, we are not really perturbed by this volatility. And we were always carrying this opinion even towards the end of the 2017 calendar year. If you remember, that the volatility which is so inherent to equity markets was completely absent in 2017, and that couldn't have lasted much longer. And we saw that breaking sometime in January of this year, and after that we have seen most of the markets in global equities showing more volatility. I think this year it's going to be a year of more volatility and more moderate returns. And within that framework, we continue to invest wherever we feel comfortable in terms of fundamentals.
Harsha, hi. But the problem is that a lot of money which came into the market last year has not seen a bear phase, and we are going through one right now. Do you reckon there would be pressure on the domestic fund flows, or do you think that will continue? Because that's been the one factor which has propelled our market. The last rally entirely was driven by domestic flows.
Anuj, if you look at domestic flows, there are two parts to domestic flows. One is more predictable, more structural in nature, which is our SIP flows, and also what EPFO has been investing into ETFs. So both these put together is about 9,000 crores a month. I think that will continue irrespective of the volatility that we are seeing in the market. And we had another 9 to 10,000 crores coming into the market on a monthly basis, which was more from a lump sum side. What happens to that money is what one needs to see. And also some portion of that was coming into balance funds, which were looking attractive from a taxation perspective earlier, and also there was a regular stream of dividends that some of the mutual funds had announced. So now, whether people will continue to invest into such funds, we need to see, especially starting next financial year. So that is the amount, plus whatever was coming in with short term in mind may take a back seat. But at least 50% of the flows that we were seeing in the industry should continue irrespective of volatility, in our opinion.
Harsha, I'm quoting someone we were in conversation with earlier. This market participant said that it doesn't matter earnings beyond a point. Last year, the market kept rallying even though earnings were bad. So could we see a reverse this year, that earnings maybe start recovering, which is the silver lining everyone's talking about, yet the market holds on to the negative factors? Is that a risk?
It's very, very difficult to predict some of the short-term movements, so I won't hazard a guess on that. But as you rightly said, fundamentals have been improving on the corporate earnings side, and that's what we are betting on. And in terms of where the overall valuations will be, that will be a combination of factors. It will not be just a fundamental factor driven by earnings or macroeconomic factors. It will also depend on a lot of sentiments, political developments, various other issues. So to that extent, I would tend to think that the second half of next financial year will be a lot more volatile than even maybe first half of next financial year, simply because we will be entering into election phase. So to that extent, the markets could be more volatile depending on the news flow.
Okay, Harsha, stay on. We have just a couple of more questions for you, but before that, Ashwani, what did you make of the week, and your thoughts on whether, you've been talking about this head and shoulder pattern and targets of 9200, 9300 on the Nifty, but in the near term, do you reckon that there could be some short covering before that?
See, that's tough to say. After all, we haven't gotten great amounts of short covering. See, the problem is different. There is serious macro news in the financial space. If you leave aside 3 banks, rest of all your banks are down 40 to 50%. Now that's not a bull market correction. State Bank, the high was 350. Today it is at 235. Similarly with ICICI Bank, etc. Unless the financials recover, the market is unlikely to recover, and that is what we saw today. So even if you have these mild, IT-driven rallies, they will not sustain because there is consistent pressure on banking.
Harsha, what is the portfolio construct? Any changes in the last month and a half at all? You've been, I think, fairly negative on PSU banks for obvious reasons. Does that continue, or are you trying to now sort of maybe hunt for some value there?
No, clearly we have been avoiding that space for quite some time now, and continue to believe that the problems are not over in that particular segment. And we have been proven right in terms of expecting some bad news in that particular space. And as we head into next 2 quarters, clearly I think the pace of NPA recognition will only increase, because now there is no hiding space in terms of restructuring forums that were available earlier in terms of the CDR, SDR, S4A, 525, JLF, I mean, you name it. There was so many of those restructuring forums that were available, and going forward that will not be available, and you will have to start recognizing if you are unable to restructure some of those loans. So to that extent, I think the pace of recognition of NPAs will increase, and that will put further pressure on the capital adequacy of many of the PSU banks. And the recent unraveling of fraud is not going to help anyways. I mean, we have already seen that growing to a larger number in that space.
Sure.
So overall, we continue to remain negative on PSU banks, and the tilt is more on private sector banks.
Fair enough. Harsha, we let you go on that note. Thanks a lot for joining us. Have a good weekend. That's, of course, the fund manager's view right now. Ashwani, so let's talk about next week's trade then. On the indices, what's the trade, and what about individual stocks?
See, index today we made a high about 10,043 on the Nifty futures. So any sort of rally towards that zone of 10,050 thereabouts should be used to sell into the market. So it's a clear sell on rally. Even if the US recovers, maybe you'll have a pop and then again you'll start selling off, because we are selling off because of banking. That has nothing to do with Trump or his tariffs, etc. That's a different problem, and I think that problem is getting bigger and bigger in terms of the market, because the banks are showing much greater weakness. Even private banks that everybody is bullish on are not going up. So my sense is that we should head slowly but surely towards 9680, 9700. And as we've seen today, the gainers were hardly any. So now nobody is putting their foot forward to buy. Everybody is waiting for the market to bottom out. So that takes out a lot of buying. So maybe till Wednesday, it should be down.
So that's the view on the index. What about trades then for Monday, Ashwani? What are you working with?
See, there's clear macro news on metals. So Vedanta is a sell with a stop of 281, target of 265. Financials are under pressure. So DHFL is a sell with a stop of 500, target of 475. And HCL Tech is a buy with a stop of 950, target of 985.
Okay. Ashwani, just a follow-up. I mean, while you have that negative view on the Nifty and the Nifty Bank, what would be a better trade right now? Would you look at, again, going in, for individual shorts, let's say on PSU banks, or is the Nifty Bank just a better shorting trade?
Well, both. Individual stocks, Canara Bank continues to fall 4% a day. Today, OBC was down. So out there is no buying on OBC and smaller PSU banks. But now the problem is that even State Bank, ICICI Bank are also falling like these other smaller banks. So entire corporate banking on any sort of rally, you can just get short on either individual banks or even on the Bank Nifty.
Okay. All right, Ashwani. Thanks very much for giving us the market call and, of course, trading ideas for Monday. You have a good weekend. We will see you next week. Quick break on that note. We'll leave you with a lot of the market opinion that we gathered during the course of the week and, of course, on Friday with those global trade wars taking center stage. We'll be back in a moment. It's been another slightly rocky week for the bulls. Market down 2%. That's the Nifty. The Sensex slipping below the 33,000 level. The Nifty obviously slipping below the 10,000 mark. And, of course, Friday itself being an extremely jittery day thanks to a lot of the tariff talk that we heard from both the US as well as China. So let's actually address that big global story. We spoke with Jonathan Sheasel of Ashburton earlier on Trump's move against Chinese imports, as well as his take on Indian markets, especially the banking sector, given all the action on the NPA resolution front, as well as all the fraud talk. We'll leave you with this conversation. Many thanks for watching. Have a great weekend, and we'll see you again on Monday.
I guess there has been some complacency, low volatility up to this point. The reality is we shouldn't be too surprised with what's going on. Trump, I guess it's one of his earliest promises that he made when he was a candidate was to try and address this huge trade imbalance between the US and China. To our mind, and I think probably most of consensus, when you look at the numbers involved, it's obviously a tiny fraction of the size of the Chinese economy. We know that China is predominantly a domestic economy, but clearly a lot of people are still employed in the export sector. So it is important. It seems China seems to be quite, constrained in its responses thus far. But I think, I don't think one can be too complacent here. It could easily get out of control. But at the moment, obviously there's jitters going on and people just don't know how far this will go.
So, I mean, if we just leave this event aside, which was sort of, a bit of an unexpected escalation, overall, how do you rate the way equity markets have been rather sluggish, even US markets? I mean, what is the sense on the way you're expecting some of the emerging markets to shape up, including markets like India now?
Yeah, I think in reality, we've been fairly optimistic about this global recovery, that we still believe we're fairly early into a global recovery. Obviously, a global trade war could easily derail this recovery. So I guess that's what equity markets are trying to price in, the risk of a major global trade war. But the reality is at the moment, the underlying world economic dynamics are still fairly favorable. Growth is pretty good over most places. Emerging markets as a complex still look fairly good value. So, yes, everybody had been concerned about, particularly about developed markets and particularly about US valuations. And obviously, the more recent news over the last week or so with, the leadership in the US market has obviously been the tech stocks. And clearly, what's been going on with Facebook, there has been some pain in one of the leadership sectors. So, I think the underlying dynamics have got a little bit more difficult. But I think from an earnings perspective and from a global growth perspective, things don't look too bad still.
Yeah, that's an important point, Jonathan, right? So what's happening with Facebook? Do you think that's putting a bit of a risk to the NASDAQ rally and also the big US rally? If the leadership space is under problem, in that case, could this derail the bull run there?
Well, I guess then it comes into question, and this is what we're all, I guess, coming to terms with at the moment, which is, will US tech stocks come under increasing regulatory scrutiny, and will they be forced to break up as monopolies? I think there's certainly a lot of people calling for that sort of move, and that would clearly be very worrisome from a stock perspective, let alone from a personal perspective. That's a different matter. But obviously leadership then under those circumstances would be pretty. I think we'd see a pretty brutal reaction from the market. However, I think we're still some way from that, and the reality of that sector is today it still looks pretty good to us, and I think potentially, I think it'd be a little bit early to say that sector's going to start giving up leadership. We were probably more in line with we'd rather have seen some sort of melt up before we get too negative than a meltdown, which a lot of people seem to think we're in the early stages of.
Jonathan, of course, beyond all of these global headlines and issues, India has had its own set of problems in the last couple of weeks, right? You, of course, own a lot of financial stocks here. What have you made of the manner in which this whole fraud issue is being dealt with? And, of course, the new RBI norms with respect to NPAs and, larger accelerated recognition of bad loans?
Yeah, it's been a painful few weeks. We had been sort of cautiously upping our weights of certain financials, particularly the corporate banks. Obviously, that whole area has come under a lot of pressure more recently. I still think anybody with a slightly more longer-term view, there's better value in that space now. And certainly, if we hadn't already put additional monies there, we'd be looking at the moment. Again, in the short term, there's probably more downside to come in some of these names, but anybody on a medium to longer-term view, I think the corporate banks and financials in general are a great way of playing the India story.
It's really interesting you actually say that. So when you're saying corporate banks, you're saying we're probably at the worst, and would you be willing to now buy into only private sector corporate banks or even the large PSUs that lend to corporates?
Well, I think when you look at the valuations, we've seen quite a brutal and very fast derating of the private sector corporate banks, as well as obviously the PSUs. When you look at State Bank, for example, where it is on a price-to-book basis, yes, there's a lot going on. Clearly, a lot of government policy still seems to be coming out. RBI policy, we're getting new stuff all the time. It feels like we're reaching a point where perhaps these things will bottom out.